Welcome back to our channel. Today we will take a look at investing in stocks. Let's dive in. Investing in stocks can be an exciting and potentially lucrative venture, but for beginners, it can also seem overwhelming and complex. With a multitude of options and a seemingly endless stream of information, it's crucial to have a solid understanding of the basics before diving into the world of stock investing. This video aims to provide a beginner's guide to investing in stocks, covering essential concepts, strategies, and tips to help you get started on your investment journey. By understanding the fundamental principles, strategies, and best practices, you can embark on your investing journey with confidence and increase your chances of long-term success. What are stocks and why invest in them? Before delving into the intricacies of investing in stocks, it's crucial to understand what stocks are and why they are worth considering as an investment vehicle. Stocks represent ownership shares in a company, providing investors with a stake in its profits and assets. Here, we explore the benefits of investing in stocks, including potential returns, portfolio diversification, and the power of compounding. Understanding stocks and the stock market. To begin, it's important to grasp the fundamentals of stocks and the stock market. Stocks represent ownership shares in a company, offering investors the opportunity to participate in its success and growth. The stock market is the marketplace where these stocks are bought and sold. Key concepts to understand include stock exchanges and indices. Learn about major stock exchanges such as the New York Stock Exchange, NYSE, or NASDAQ, as well as market indices like the S&P 500 or Dow Jones Industrial Average, DJIA. Types of stocks. Differentiate between common stocks and preferred stocks, and understand the potential risks and benefits associated with each. 2. Setting investment goals and risk tolerance. Before investing, it's crucial to determine your investment goals and assess your risk tolerance. Consider factors such as your financial objectives, time horizon, and comfort level with risk. This will help shape your investment strategy and asset allocation. 3. Conducting fundamental analysis. Fundamental analysis involves evaluating a company's financial health, performance, and future prospects. Key elements of fundamental analysis include financial statements. Understand how to read and interpret financial statements such as the income statement, balance sheet, and cash flow statement. Company valuation. Learn about various valuation metrics like price to earnings, P/E, ratio, price to sales, P/S, ratio, and dividend yield to assess a company's value. Industry analysis. Consider the industry trends, competition, and market dynamics to gain insights into a company's competitive position. By mastering the fundamental analysis, you can make informed investment decisions based on the underlying strength and growth prospects of companies. IV. Implementing investment strategies. There are different investment strategies that investors can employ based on their goals and risk tolerance. Some common strategies include value investing. Look for undervalued stocks with solid fundamentals, aiming to capitalize on their potential for long-term growth. Growth investing. Seek out companies with high growth potential, focusing on their revenue and earnings growth prospects. Dividend investing. Invest in companies that pay regular dividends, providing a consistent income stream. Versus diversification and portfolio management. Diversification is a crucial risk management strategy that involves spreading investments across different asset classes, industries, and geographic regions. Learn about the importance of diversification and how to build a well-balanced investment portfolio. Key considerations include asset allocation, rebalancing, and understanding correlation among investments. VI. Risk management and emotional discipline. Investing involves inherent risks, and it's essential to manage them effectively. Understand risk management techniques such as setting stop-loss orders, diversifying investments, and maintaining a long-term perspective. Additionally, emotional discipline is vital to avoid making impulsive decisions based on market volatility. 7. Staying informed and continual learning. The world of investing is constantly evolving, and staying informed is crucial for success. Develop a habit of regularly reading financial news, following market trends, and continuously educating yourself about investment strategies and opportunities. The conclusion. Investing in stocks can be a rewarding and empowering journey. By understanding the basics, setting clear goals, conducting thorough research, and employing sound investment strategies, beginners can navigate the stock market with confidence. Remember to approach investing with a long-term perspective and to continually educate yourself to adapt to the ever-changing investment landscape. Start small, stay informed, and enjoy the process of building a more prosperous financial future. Happy investing!